This conference will now be recorded.
Good afternoon, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 5:07 p.m. on June 18, 2020. Welcome. This is our midweek strategic webinar, which we normally do on Wednesday, but I delayed it by a day because the last webinar we did was on Monday. On that note, welcome. Full disclosure, this is purely for financial education, not for any solicitation or advice. These webinars, these webinars are like your video blogs, are uploaded to our Clueless A Trading YouTube channel for viewing by anybody at any given time at their own pace. And prior to that, I also post a link for the recorded link for this webinar on the GoToMeeting link directly on the real-time Twitter feed. So you can click that and listen to it, or you can wait for the upload on YouTube, which normally takes a little while, probably a bit later on. Whichever the case, the GoToMeeting link of this recording session or the recording will be put out on the real-time Twitter feed approximately 20 to 25 minutes after we finish. All right? All right. So it's a busy family day. I had to take care of a few things, summertime stuff, important things. So that's why I wasn't around today. But we delivered some fantastic results on multiple trade alerts. Some of them went through the roof, like Cloudera and a few others. Some of them were flat to slightly down, like Caterpillar, United Rentals, Boeing. But overall, net, a strong, profitable trading day. So, most importantly, we have a bunch of new people here. So, you know, they're sort of sitting in for the first time. So I'm not going to get way too technical and stuff like that, but I'll certainly explain to you what my forecasts are on the overall markets. We're going to look at a couple of stocks because that's really where the money is made. And we'll go from there. We'll also answer a couple of quick questions as we move along. Is everyone with me so far?
Yep.
Yes.
Okay.
Yes.
Sounds good. So one of the key things about the Clueless A Trading service, and this is not a marketing pitch, I'm just trying to explain to you so a lot of our new people can understand how we operate, is you got to focus on the charts. It's not a marketing slogan like chart, all the tactical charts and all the different verbiage and lingo that I use. These are very critical for your profit and loss trading P&L, trading profit and losses. Because even if I'm not around, like today, I did tell you since all week that you got to keep an eye on the trading range. So let's keep this simple. Let's get into it. So here was the trading range right there, which I posted quite a few times yesterday and also since Monday, right? So the trading range was 31.56. That's the green line, upper end of the trading range, and the lower end of the trading range was 30.63. Now, one of the key critical power of these Clueless A tactical charts are that we present these roadmaps prior, not after the fact, but before the fact, prior to before things happen. And that's what we call predictive analytics. It is not easy to do, especially in highly volatile markets. Despite the market climbing, it is a very volatile market. Look at today, down almost 300, came up almost flat. Same stuff yesterday. That's just the way it is. That's the nature of the beast. So if you start to understand these charts and don't overcomplicate them, then you're going to be fine because you'll be able to understand what road the machines, the algorithmic high frequency trading supercomputers that control the market, and that's why we have such massive speed up and down, what road they're following. Okay, so that's my job to present these detailed, what I call GPS roadmaps, so that you guys know how to stay on the road, what you need to do. If we break down, reduce your positions, maybe do a couple of quick shorts on the SPY or any other instrument you like, buy some puts and things like that. So trading range 3156.88, and these are the S&P E-minis, the futures, 15-minute time frame. Each candle is 15 minutes, as I've explained so many times. Well, you guys already know that. You can see all the zigzag, all the pullbacks, but it stayed within the box. And that trading range, the box, was 3150, let's call it 3156, and on the lower end, 3063, right there. Okay, so it stayed within there. This was 9:30 last night. This was 7:30 this morning, right there, when futures were down 22. And this is where we ended up, 3101. So still within the box. Okay, and so it's very important for you guys to, obviously, I keep on repeating myself, it's very important for you guys to understand this to a certain degree and manage your trades accordingly. You don't have to jump up and down every time the market falls. You need to stay calm. Every stock I was monitoring things, and I was doing some trading myself, took some nice profits, added a few things directly off my iPhone because I wasn't around in front of my trading desk. And so what I did notice was there was a lot of green stocks on the screen, despite the markets being down at one point, a couple of points during the day. So that's a good thing. Specialized situations were up quite a bit, and we're going to look at each of those stocks. So that's it. So this is your roadmap. If you want to look at it on a, let's do a broad brush stroke here. This goes back to almost the beginning of June. So let me just point that out. So June started here, June 2nd, June 1st, right there somewhere, okay? June 1st. And so this is the whole month of June that you're looking at. So if we're doing that, let's do a wide technical, well, these are very technical drawings, but let's do a wide, what should I say? Back of the napkin type of thing. All right, here's the month of June. We are now on the 18th, right here. This is the market closing today. So what structure are we looking at? The way I'm looking at it is this is a large, this was the big crash that day when the markets were down 1,600 points. We lost like 6% in one day. That's unheard of. And then we tumbled a little bit more after going up. So this is the structure I'm looking at. And there's your trading range. Okay, so that structure is known as a inverse head and shoulder. For newer members, I have terrific training videos on the YouTube channel under new member intro. Look up, find this great explanations on chart pattern analysis, what they mean, and all kinds of other stuff. So please try to get yourself familiar with that stuff before we start on with your advanced coaching sessions and all that stuff that we do here to help all our members. So this is a inverse head and shoulder, and that is pretty much what's getting played out. This can also be looked on as a cup and handle. And let me just bring that out. A large cup, a handle. This is a wide trading range. That's almost 100 points. As I explained in my on the Monday webinar, this trading range alone, or the handle, this is what a cup and handle looks like. It can be like this, it can be like this, but basically it's known as a cup and handle. This cup and handle is roughly 100 points. So you're looking at a good 700 to 800 Dow points. That's a wide range, and that's pretty much what the markets are doing right now. We're going to look at the longer term charts and make a determination. My feeling is the market pretty much wants to get up here again, and at that point you will be met by some very powerful sell programs. And even if it goes from here to the top of the trading range, which is going to be the next resistance, in other words, that's where the next major sell programs will come in. You can see that. Let me just zoom in now. That's better. That's better. There you can see. It's also, I call it a Texas bullhorn pattern too. Why? Because it looks like a bullhorn. Look. Right? So, so my thought process is that we have been trading in this range, since the 16th, just this week. Okay. Once we made this big move, and we can very well test the bottom end of the range again. If we break that, then obviously there's going to be a pretty vicious sell-off down towards the next red line at around 3,000, and that is another 700 points. So we have to be, we have to be careful about that. We always have to know what the downside is, and we also have to know what the upside is. Let's not get too happy. Let's not get sad. Let's be very robotic. That's what we do here. We try to be robots. We don't want to have little voices talking in our heads. Stay calm. So yeah, so that risk is still there. I don't think it's going to be tomorrow, but it could very well be, I don't know. We'll see. So if we break out over this upper end of the range, then we'll have a strong move up towards 3,200 on the minis, call it 3,200 and change, whatever, on the S&P 500, and that is going to be good for another 600 points or so on the Dow, and that is also very possible. So this is really what we're trading in. So the markets vacillate 700, 800 points within this range, within this trading range or box, right? And you hear the commentators on TV, you hear other people in different trading forums freaking out. Well, don't freak out. Doesn't feel good when you have a position and it's down 40%. That's what options do, right? But as long as it's here, you want to look at the charts so you know what the markets are doing. You want to look at the charts of the stock that you're in that is getting pushed around because of the market movements. And then you do the dollar cost averaging strategy that we use. Bought a call at 2. If it's down to 1, we buy a little bit more, and then you see it zoom up to 4. This happens a lot. That happened with Cloudera. Okay, so that's it. That is pretty much the picture right now. The technical structure is still intact on a short-term basis, and so far I like it. Things change. I will try to warn you guys before it changes, and that's what we do here at Real Estate Trading. All right, is everyone with me so far?
Yes.
Yep.
Okay.
Yep.
And feel free to stop me and say, hey Frank, just explain that. I'll do it. I'll do that very quickly. We don't want to get into too many long-winded technical discussions because I want to cover quite a few things as quickly as possible. Because I have to bolt out of here sometime by 6 o'clock. Well, not 6:15 probably. All right. Now this chart is very important. Very important. All right. This is the 1 hour chart. So each of these candles, there are 4 15-minute candles on each of this because this is a 1 hour candle. It's a little bit easier on the eye because there are lesser zigzags. As you zoom out in time frame from the 5-minute to the 15-minute to the 1 hour, which is 60 minutes, right? Obviously, there's going to be less noise. What's noise? Noise is the gyration up and down as the machines move the market. You guys with me on that very simple but powerful concept, right?
Yes. Yes.
Okay. Now, why is that important? Is because if you are trying to scalp a trade, let's say you got into Tesla and the things like moves, like you go into Netflix and that thing's moving, you have to keep an eye on the 15-minute charts as well as the 1 hour charts, or you're trying to trade the SPY, the broader market, S&P 500. You're going to keep an eye on this because your profits can disappear very quickly. We know that. We're traders. Traders are, like they say, you snooze, you lose. So the key is that, but at the same time, you got to kind of zoom out once in a while and say, okay, what's really happening? Is it really breaking down, or are they just moving things around? So the 1 hour chart is a very helpful feature. Now on this, I have some very powerful technical structures drawn. One is this line here. Yesterday I put this chart out with a big word here, ascending triangle. So this is known as the ascending triangle in my book, right there. So we were still in the ascending triangle till yesterday was the 17th. Yeah, till yesterday. Then we fell out of it, and we held the range support again. Now, what if the market goes back into the goes above this upper border, which is a major line here. This is where the big sell-off happened on the 16th, 2 days ago. Big. First thing in the morning, right after the market closed, and right at 10 o'clock, 11 o'clock, the market turned exactly from where I said it was going to turn. These charts are drawn before things happen. I want you guys to understand that, all right? Please. I don't draw it like after it happens just to show, oh, I know what I'm doing. Well, actually, I have no idea what I'm doing. I just do what I do. I'm just kidding. So bottom line is, that's why I'm clueless. So the bottom line is that these charts are drawn there, and the markets, like I sometimes say, the algos, the machines, the markets are obeying clueless trading tactical charts. And they do obey these charts because markets are very mathematical. They're very, non-linear, but at the same time, there are structures. So if we do break out over the upper range, see these red lines, they're downtrend lines from the top here. This is from the 9th of June. Then we're going to make a very sharp move up towards this range. That's going to be one of those big rocket ship type of up. First, we got to break this downtrend line. Each of these downtrend lines have been met with selling. You can see that. So don't get too overcomplicated. Keep this simple, and you know exactly what I'm talking about. Now, this is the structure drawn over this is known as a Fibonacci retracement. Very useful tool. Very useful tool. The Fibonacci retracement. Fibonacci retracements from the bottom up go from 0, 23.6%. You just have to move the decimal to the right. 2 numerals to the right. 23.6%. These are standard. I don't write these. You can draw your Fibonacci on your side too, on anything. Fibonacci's work fantastic during extreme sell-offs and extreme rallies. Okay, so we have 23.6. Hold on one second. 23.6, 38.2, 50. Fib 50. Make that your friend. Fib 50. Anytime you get a very sharp sell-off or a very sharp rise, the markets will come back and retest the Fibonacci 50 level. We call it Fib 50. Then we have 61.8, 78.6, and full pattern completion over an intermediate short-term basis, which is 1 or 100. Okay, 100%. So right there. So this dotted blue line is the Fib 50. As I always signify that with a dotted blue line, thick dotted blue line. And guess what the markets did? It came back and retested it repeatedly on this inverse head and shoulder, which is more visible here. Look. Beauty. All right. And that cup and handle, remember this is the handle. So it's tested the Fibonacci 50 level 1, 2, 3, and this is 4. So this 4 is strong. So strong means that if it breaks, then we come into the next level here at 30.42. So I know pretty much if I'm going to short the SPY for the next 30 minutes or so on a trading day, I know that at this level, they're going to bounce it again. So I will take some quick profits, very fast scalp profits, day trading type of stuff. And you guys can do it too. You don't even need me to tell you. Some people ask me, which SPY should I buy? Well, if you're buying the one which is expiring the same day, then we have the Friday ones too, tomorrow, which will expire tomorrow. Or you can buy the one for Monday if you want. I like to do it, keep it very close. If I'm day trading, I want to trade that same day. Or maybe the next day. So the SPYs, let's say the SPY right now is at 311.37. So I would buy the SPY 311 puts for June 18th, right there. So if it breaks below 311 or it comes close to that, you see that going like 20%, 30%, 40%, 50%. Do you guys understand what I just said? Because we have done these quite a few times. They move very fast and they're cheap. If you buy the same day ones, they're cheap. You probably pay 90 cents, maybe $1, maybe $1.20. And as it's breaking, that $1.20 will be $2 or $2.40. You just made yourself 60, 70, 80, 100%, like real fast. Because when the breakdowns happen, they happen very fast. Sometimes they happen too fast and I don't want to touch it. Because by the time I want to get in, it's already coming into that major support level, which is the Fib 50, and also the lower end of the trading range on this cup and handle. So why should I risk my money? For 5 minutes, I could be up, and in the next 5 minutes, the machines turn around and bounce the market. You are in a loss. So if you do it, for whatever you want. Don't do it with like big money, or you can do it whatever you want. I mean, I'm not here to tell you that, but you got to be very fast on this stuff. Now, if you catch it on the upper end of the range and you catch this entire move, well, that's a different story. Any questions on this very simple day trading strategy by using these real-time tactical charts?
I have one question, Frank.
Yes, go ahead.
And you mentioned June 18th. Of course, tomorrow's the 19th. You meant, right? So.
Oh, I'm sorry. Yes, yes. I'm sorry.
I was just wanted to get your opinion. And sorry, I arrived 5 minutes late. I'll go back and listen to that at the beginning.
Go ahead.
What's your opinion? Apparently, there's like $3 trillion of options maturing tomorrow, quad witching day.
Yes, my opinion is exactly your opinion. Quad witching, which is tomorrow, and please, you guys can please learn the definition of what quad witching is. It's 4 witches like flying over the sky, right? Just kidding. It's quad witching happens on what, every 3 months, right, Paul?
Yep.
And it happens
third Friday.
Yeah, every quarter, and the third Friday, which is monthly options expiration tomorrow, we have quad witching. And like Paul mentioned, we have 3 trillion plus of what they call notional value. That's huge, because options, remember, one option contract controls 100 shares, right? So when quad witching happens, there's a lot of movement. A lot of quarterly options are expiring the same day. 90% of the time, 80 to 90% of the time, quad witching Friday, which is one of them, which is tomorrow, is a positive, powerful day, at least for the first, at least till the first half of the day or so, and also towards the end, because these options have to settle. And please read it up on Investopedia for new members. I want to guide you towards this site, which you should bookmark, and any terms you want to look at, financial, just go to Investopedia. Many of you might know that, I'm sure you do, and just type in quad witching. So my feeling, as I'm showing this to our newer members, so it's actually quadruple options expiration. Quadruple options. There. Okay, quad witching definition. Witching refers to a date that entails a simultaneous expiry of stock index futures, stock index options, stock options, and single stock futures. Wowza! Okay, and more than $3 trillion, $3 trillion of notional value. Because remember, one contract controls 100 shares. So if you add the aggregate of those 4 options asset classes, it comes to more than $3 trillion. A lot of activity, especially volume towards the end of the day. So expect volatility tomorrow, but generally it is an up day. Now, the other reason is a kind of psychological reason. It's Father's Day on Sunday, right? So I don't know. I always believe that before major holidays, markets don't like crashing. It happens once in a while, but generally not. So yes, quad witching generally is a very powerful force. There is also a lot of mini portfolio rebalancing where stocks will move on their own thing. So you'll sometimes see some stock red and some of them are like bright green. You're like, why the market's up? Why is that red? That's all because a lot of different balancing is going on. And now that the machines do it, it's very fast and furious. So I believe that it is going to be a positive day overall. And also the American Association of Individual Investors Sentiment Survey came out, and the number of bullish retail investors fell again as the markets are climbing. And that is a contrarian indicator. I believe the bulls dropped to 36% or lower. That's low. Like, nobody believes in this market. Not the institutional fund managers, not the majority of traders out there, which is fantastic news because we're nailing it. And we are overall remaining bullish because that is what happens. There is close to $5 trillion, more than 4.6, I'm sure now, $5 trillion worth of cash sitting in money market accounts. Even a little bit coming into the market as they can't take it anymore. It's like, oh my God, I can see this thing, stocks, that Pluto say trading gave. No, I'm just kidding. But seriously, like, name one, and let's name Cloudera, a small stock, cloud stock, from like $10, closed in almost 40% just in 2 weeks. That's a stock. Forget about the options. That went from 18 cents to $1. I sold a bunch at $1. That's 400% plus profit. Just for suggesting it and selling it. One click, boom. So there is that very negative sentiment on the markets. Everyone's scared. Everyone's there's a lot of scary headlines out there. So they just go with that. We go with charts. And then you have quad witching. So overall, I think it will be a positive tailwind catalyst to the market. Did that answer your question?
Absolutely, and the dark pools support that thesis too.
Yes, and Paul is he gets some fantastic data, the dark pool support, and please, you could look that up too, your members on Investopedia. These are institutional private exchanges where the big investment banks and institutional funds can participate and buy and sell, and they're known as dark pools because that data is not shown to the public. Okay, what we see in volume and all these movements and stuff, this is all public data. That is not. That's why it's called the dark pool. It happens behind, away from the public eye. So that with that, Paul sent me the thing. I'll post it too. The graphic on that. That is also net buyers.
Oh, and Frank, can I interrupt you, sorry?
Go ahead.
The latest dark pool data just came out just as we were speaking here, and the sentiment in dark pools was up again, and it was huge yesterday. So now we're getting to like close to all-time highs in dark pool positive sentiment. The reading is 51.3 today. It was 50.0 yesterday. Today finished green right at the end of the day. So far, whenever the dark pools have printed 50 or above, and again, it's 51.3 today.
I'm sorry, you got cut off.
The next day on the market has been green 12 out of 12 times.
There you go. So we'll go with that.
The market has been positive 12 out of 12 times. Yep.
Okay, so that agrees with my explanation on the side, and thank you for that data. So let's hope that that's the same thing that happens. Whichever the case, for a lot of new members, who just joined us, remember, it's a market of stocks, not just a stock market. All right. So you'll have some stock, you'll have a lot of stocks in a red market, low market, but it's still going to be going higher. So that's what I try to suggest as much as possible. So whichever the case, let's move on. We have, and thanks, Paul. We have the 50 Fibonacci level here. That's holding, retesting repeatedly, upper end of the level, just to go from here to here. Forget about a breakout. Just to break out over the downtrend line and moving from here to here is good for roughly 400 points. Okay, on the Dow Jones, right there. And that's going to push a lot of big cap stocks and a lot of like the United Airlines, the Caterpillars, the Boeings higher. Okay, so just passing it on to you. And here, let's say we get another sell program. Well, let's see what happens. You might get a small one and then breaks out. We're coming into the end of the month, and this is something I want to explain to you guys very quickly as I move on from this chart. Any quick questions on this chart? It's very easy to see. There is this big gap here. We blew through the gap when we crashed, as I predicted. And if we do fall, we will come back and retest this gap. This gap is massive support. Massive support. All right, upper end of the gap, lower end of the gap on the worst case scenario. Any quick questions? No? All right, let's move on to the next chart, which will explain the overall slightly longer term directional bias on the market. So let me pull out my daily. And this I showed again yesterday. And this is, in my opinion, very bullish. Again, you can see here now that you're zooming out, each candle is 7 days, right? I'm sorry. Yeah, 7. No, it's not weekly. I'm sorry. Each candle is 1 trading day. And you can see here, and this chart was drawn a while ago. This is a Fibonacci level 2. On the broader picture, the real support on the Fibonacci comes into play at 2780. That's a lot down. I'm not even looking at that. Hold on. I am looking at, hold on. Sorry, I'm looking at this thing here that it bounced off exactly. Can't get any better than this, all right? And this is a upwardly rising channel. It bounced off exactly off the upper gap. When did it do that? It did that on 6:15, a couple of days ago, 4 days ago, and did this. This is what we did today. So this is still within this channel. See this channel right there? And the looking below under the hood, these are your full stochastics, and that is still crossover up is intact, slightly, bending here, trying to cross over down, but it still, to me, looks like it wants to do this. Once it gets up into this overbought zone, we could go, well, that's quite a bit higher. Once we get into that overbought zone in that 3,200 level, then obviously you're going to have another 600, 700, 800 point down day. It's just the way things work. All right. And best case scenario, where there's a gap here, we go to 3,300. That's a lot. I mean, that's a lot. That's 1,600 points from here to here. 1,600 points. Can it happen? Yeah, sure, it can happen. Okay, so looking at this picture here, guys, just get used to, you can see here, this is a definitive cup handle. And I've been talking about this since April. And then we have a massive breakout around the 13th of May, 15th of May, after the 15th of May. Big breakout, then this big pullback. And that was a very manipulative pullback that I want to explain right now. That was a complete ambush of a lot of retail traders by big institutions. That's the reason why we had that 1,600 plus down day, and net we were down 6.5% or something like that within 3 days. So anyway, they did their job. They demolished, they washed them out, and now we're getting back up, getting back up towards this level. So I think as long as this is crossing over up, any type of pullback will be bought, and we can move higher. So the basic point is the daily chart looks fine, looks good, uptrend intact. Let's take a quick peek at the weekly, which should give us a bigger idea of what we can expect as we move towards July 4th. And that weekly chart, ladies and gentlemen, is certainly at least what I can see from a technical perspective, telling us higher. Okay. This very positive, moving very nicely on the upper end of the MACDs, moving very nicely on the upper ranges. The crossovers are intact. They want to go into positive zone, and once you get overbought, they sell. I'm not saying we're going to get this type of sell, but I'm just saying that's what they do. So the weekly chart is very good. Everything is looking fine. So let's do a quick thing. This looks good. This looks good. These candles are beautiful. This is weekly. This is March 23rd. And I explained this on quite a few webinars in the past week to 2 weeks. Each candle is 1 week, 5 trading days. This is known as a bull flag. A bull flag, fat but green body, that means billions of dollars have actually come in and sitting there, the so-called smart money, and they're buying the dips. And this bull flags, what do bull flags do generally? We know that by now. They break out. Why? Because of the nature of the beast. The primary trend is up. Then there's a bunch of days, in this particular case, about 2 weeks of profit taking overall, not every day, but just in general. And then it continues on the primary trend, which is higher. Any question? Yeah, go ahead.
I've heard other traders say that to measure the highest point of a bull flag, once it breaks out, you measure the base to the top. Is that what you subscribe to as well?
The base to the top of
and then
add
it on, to the top, and that's how high it'll go after the bull flag. Is that?
You mean, okay, 1 second.
Yeah.
When you say the top, meaning what? You're considering this to be the top of the bull flag?
Yeah.
Yeah, which is 32.30. So your question was?
I've heard other a few traders I've heard. Yeah, they say you measure the top minus the base, and then you add it onto the top, and that's where it'll end up.
When you say the base, which base are we talking about? This base
21,
or the
2171, 2171.
So basically 2171, and this is 32.28. Are you guys following us so far? What Paul's asking?
Yeah. Yes.
Okay, let's do this. Yeah. All right, so it's from here to here. Let's do a quick numbers calculation. From the 2171 level to here is roughly 1,057 points. So let's call it 1,050, 1,060. So what you're saying, Paul, is if we break out over this, we should add another 1,060 points on top of that. Right. I don't know. Because let's put it this way. These are longer term projections when we're looking at the weekly. So this is what you're saying could happen. 1 sec. The dogs were barking on the patio. I told them to calm down. So anyway, so this will not happen in 1 week or 2 weeks. This will be a multi-month process. And if we add this, let's see where we get to. If we add 1,060 to 3220, 3220 plus 1,060, we arrive at 4,280. So from a standpoint of, that's like, you're talking serious numbers. You're talking.
And Frank,
8,000. Let me finish. Yeah. So 4,280. So I have some lines drawn here. Just let me finish my chain of thought. So, so if I have these lines drawn here from a while, let me just show you these two. So if I expand that, I can see a move up to 4,000 on the S&P. But this is something that you can, this will take. This is a multi-month process. Yeah. What were you saying?
If you do a Fibonacci extension from the all-time high to the bottom in March, you end up at right around that level.
Right at that level. Okay. I totally I totally subscribe to that. Now, remember what Paul is talking about is some the long-term swing trades, which could be into September. You know what I'm saying? Right before the third
And
quarter
this is
starts.
weekly
This
weekly chart, of course, right?
This is the weekly chart, exactly. Now, maybe we can see this on the monthly. Any questions on this one, guys, before I move away? Because we're covering some good stuff here. Now, if we look at the monthly chart, this to me is super bullish. There's nothing in this picture. Look how beautiful. Each of the lines are all crossing higher. Each of the lines. Look. Beauty. And this is a chart that goes back to 2009. You're talking 11 years ago. All right? The bottom of the market for our lifetime at least. So every single time, and this is what we did in March. So basically, this is very positive. So this is telling me that the upper end of the range is 3,600. Everything is positive here. This is starting to turn, all good. This is a monthly chart. So let's say you do not want a day trade, you do not want a weekly trade, you just want to buy things months out, then you can use these charts and do it. So let's try to see if we can reach the number that Paul thing. What was the number for 40? I'm just going to see if I can.
42.85.
Okay, we might hit that. 1 second. Now remember, these charts and stuff, guys, they'll keep you in the game, but they're not going to make you money right away. All right, these longer term charts, just so you know. All right, because there's going to be a lot of volatility. Each of these candles is 1 month. You know, in 1 month, the world can change upside down and still end higher, right? So, you know, so the way I look at it, I certainly keep an eye on it to give me a directional bias. So this one, if I do this, extend thing, where do I come to? I come to 43.75. So yeah, it matches. It can do that. All right, let's move on. Now that we have covered the basis of the market, let's talk stocks. Any questions on this?
The only comment, last comment, Frank, is what you said earlier, that unprecedented amount of trillions of dollars in cash. That's something we never had before, right? So
No.
Personally, I think once we break all-time high, there's going to be some fear of missing out happening.
Yep, absolutely. And the fear of missing out is already starting, you know, because initially people who took all that money out in March, right at the bottom, and institutions too, but let's say people who were still in the market, they're so shit scared, they don't want to come in the market. But that happens in stages, okay? Those are known as Elliott 1, 2, 3, 4, 5. And the thing is, at this point, there is a certain element of excitement by a lot of active options traders. So right there, the markets do that 1,600, 400, 500 point drops just to wash them out, okay? In between that, just so you know. So it's not like because once those people got hit, they didn't come in. So and then the markets were down 1,600 points just a couple of days ago, they didn't come in. The markets are down 700 points, they don't come in. But at one point when they see it going higher, that's called FOMO, fear of missing out. Then they say, no, man, I really need to get in. And that basically creates a very sizable top on the stock markets. There's a lot of cash on the sidelines, like I said, and that's just the way it goes. All right, let's move on from the big picture. Let's look at the small picture that puts a lot of money in our pocket. Cloudera. I know somebody here who nailed Cloudera, right? And I hope that I wasn't the only person. Ricardo, you did very well in Cloudera. Now this stock I've been showing for a while. These options yesterday, these are the June 26th options. They were 20 cents. You could have bought them cheaper actually at like 10, 15 cents, like yesterday or the day before. And they went to $1.05. All right. And let me just show you. So they go to $1.05. That is huge. That's 400%. And I will show you. Anybody sitting on Cloudera? Did it trade Cloudera? What's the story? I want to hear some feedback from you guys.
It's
So,
yeah.
I bought it.
Okay,
I
and
mean,
no one has to talk specific, like dollar amounts, anything. I'm just asking. Yeah, you bought it. I told people to buy originally we bought the 12 calls, and then we moved on to buy the real cheap ones, which went through the roof today, which are the 14. These are the June 26, 14. They have a lot of weekly calls too, and these are the ones. 1 second, I'll show you. Yeah, go ahead. Finish your thought.
yeah, I bought some. I sold it for like double, then I got back in.
That's sweet. That's sweet. It's the way to do it. All right. Things
Thank you.
move fast. I managed to get out right around that one level, sold the chunk. Okay. But look what they do. So they basically did this. And options makers are very, very smart, right? So these machines, they don't give you a chance. You need to go boom, just out. That's the first thing you do. So here, this was Wednesday. Yesterday, you could have bought them yesterday afternoon at 21 cents. Look at the price, 21 cents. Let me just highlight this. I kept on just buying it. I told you guys to buy it too. That's why you know. You could have bought it on Wednesday to Tuesday. You could have bought it again, slightly lower than 20 cents. Let's call it 20 cents. And bang. So people who are new in options trading, when a 20-cent call goes to $1, more than $1, $1.05, that's a 5-bagger. It's 5 times your money. That means you made yourself 400%, not 500%, 400% profit. But it went up 500. It went up 500%, but you pocketed your profit. I'm going to put P is 400%. So it went to $1.05, actually a little bit more than that. So the way you look at it, let's say you had, let's say instead of 20 cents, this was actually $2. So that means you bought something at $2 because the law of numbers, our brain likes to look at big numbers, right? So if it's too small, like 20 cents to $1, they're like, yeah, that's kind of exciting. Well, it's actually the same thing. So why not call it, let's say it's $2, it went to $10.50. Like, let's say if it was a Shopify call, it would be $20 and you would be selling it at 100. Now 20 going to 100 attaches to our neural sensors in our brain faster because we like to look at large numbers, but it's the same thing. All right, there you go. So sweet trade, still working. So for fast traders, you need to, you want to sell the pop in the morning, and then you have a bull flag, and it closed around 73 cents. Still good. What does the stock chart look like? The stock chart looks like this. This company could be, it's a smaller company, very dynamic. Not many people know about it. It's a cloud infrastructure play, hardcore stuff. Maybe somebody's looking at them to buy them. I don't know. It happens. This is your daily chart. It is very powerful. I had drawn this chart a while ago. The daily chart is projecting $16.22. So as an options trader, where I want to keep all my profits in my pocket and just play with some loose money that you just made, okay, thanks to this great trade, then you would be looking at buy some mid-July 16 calls. So how much of the mid-July 16 calls? I don't know. Let's check. That's the smart way of doing it. So if it doesn't go there and it pulls back into the $11 range, you don't lose much. Whatever you lose, you still kept all your money. So that's the way I do it. You move out the strikes and the dates. So 17 July 16 calls. There is no 16 call. There are 15 calls. Strike price 15 will cost you $1. You buy time, lots of weeks. Oh my Lord. Do you know there are 100 and let me show you this, guys. I didn't even see this. Hold on. This you guys would like. I'm gonna jam up this baby tomorrow again. All right, you ready, guys? July 17. Everyone, please have their eyes open. if you may. 110,481 calls transacted.
Damn.
Of course, buy and sell. And look at the open interest. Now, some of you newer traders don't know what open interest. Open interest is what was the original volume there. What was the inventory sitting there? It was 6,700, and they transacted. Remember, when somebody's buying, somebody's selling, right? Somebody's selling, somebody's buying. So it's a aggregate total accumulated number, aggregate number. 111,000. That's fat. Somebody's sitting on it saying this baby is definitely going to 15. Well, that's I'm not saying that. I'm just saying that's what the options flow is telling you. Does it work all the time? No. Is it a good indicator? Yes. Or you want to push it really hard? Go to 17 and a half calls. They're only 45 cents, 50 cents. And even there was 4,800 calls transacted versus 2,800, which was there yesterday. Now, look on the put side. Are you guys with me so far? Just showing you simple things that that all options traders need to do.
Yes.
Do you see anything that's really mind-boggling? Nothing. It's like a totally boring, like, okay, open interest, 820, 2,500, like. So there is. It seems like whoever the big boys are playing in this stock, they're not even hedging themselves for July. In other words, this carries a lot more weight than this. It's pretty wild. It's good. I didn't see that till now. All right, let's move on. So this stock, like I said, 16 bucks, and believe me, these things happen fast. So if you're not in it, you're just not going to make it. Make that money. So let's put this down. Let's look at a weekly chart on this stock. A weekly chart is really powerful. Cloudera was a $22 stock back on April of 2018. Each of these lines, this is the Fibonacci retracement that I drew from this point to this point. This is a weekly. So if we go by the Fibonacci's, we are just at, guess where we are right now? We are exactly at Fib 50. Like I told you, magic, technical magic, right? Look, 50, Fib, 50, Fib. Hello, can't get any better than that. What's the next Fib? 61.8. That's $16 or $15.68. Next point where they slammed the stock is 78.6 Fib is 1867. Call it 19. And pattern completion is 22. If there is a buyout on the stock, I have a very strong feeling they're going to buy it between $19 and $22. You heard it here first. And this is very bullish. The candles, the size, and this is the weekly candle. This is the second week. This is the second bullish engulfing candle week. Look, one. This week they took it up here and they slammed it. That was actually bad. That was like that's like a Chinese firecracker. That's known as an inverted hammer, spinning top, naked bar, whatever you call it. It's just like it's like falling. But let's guess what it did. It just kissed that downtrend line, turned around, and 2 weeks in a row. So this is now entering this channel. This chart was drawn a while ago. We have traded this stock before. Now it has entered this channel. It closed into that upper end of the channel, $16.59, $16. And let me just put it this way. Cloudera was only up 10.5%. If the stock hits, by the way, these lines are automatically displayed by Thinkorswim. They're not mine. So, but still, they're good. So at this point, the stock is a little stretched. It might pull back a little bit. But imagine if this stock into mid-July goes to $16, this 500%, 400% profit will look like baby food. Baby food. It'll be up 2,000% on net profits on these monthly options. Any questions? No? Yes? Maybe? All right, one of my other stocks that I've told you guys a lot, Alteryx. The stock is zooming. It was up a lot. It was still up a lot. It didn't care about the market. I've been telling you guys to buy this stock since 120, 130. In fact, lower. Going back into May, April. I always mention the stock as a long-term swing play. This is the ultimate company, Alteryx Biotech. Biotech analytics, cloud, powerful. It broke out. It broke out. It broke out of a multi-year range. Do you guys see that right there? Multi-year range. These breakouts are like bulldozers demolishing the shorts. All right. Upper end of the scale is 171. It can go a lot higher. A lot higher. Again, another company which no one talks about. I know Kramer's mentioned it a couple of times. We've been in it, back and forth on it since the low 100s. And this is a weekly chart. There were 2 weeks it fell from 151 down to 129. Told you guys to buy it, and bang. Those are beautiful calls too. They were up about 130% today. All right. So Alteryx. What's the other one that I like? This one, Macrogenics. There's so many stocks in the market. I'm just picking the ones I think are. I don't have time to scan like 900 charts. Just the ones that I have. They pay the bills. They pay the bills big time. Hey, I stay focused. I don't want to be a master. What is it? A jack of all trades and master of none. Give you guys like 900. Like, hey, I scanned this. I found this. And then what? How am I going to track all that? I want to focus. A powerful chart. MGNX. This is another beauty. It shot up. We were not here. We got in around these levels. Once it broke out, went up to 27, went up to 29, pulled back to 20, and now on its way. So so this one is a very powerful chart, and I'm expecting the stock to hit 30 fast. Calls are real cheap. Look up on the Twitter feed. I've mentioned it quite a few times. What's the other one that I got like a lot of them? But Novavax is breaking out. This is an old name in the heels of their coronavirus treatment. This is serious. Novavax's chart will hit a roadblock at 61.5, but if it breaks out over that, hallelujah, watch out. There's something going on here aside from that. I mean, there's some big funds accumulating the stock. These are very bullish longer term swing charts. And the Novavax, they have weekly calls, they have monthly calls. I'd be long this into July. It's very powerful, and if and the options move. The options were up roughly about 60% today, 45% of the close. But this is serious. 1 second. Novavax has also been talked about many times as a buyout because of their novel treatments. This is a weekly bull flag, which has a depth of 15, 16, 18 points. If this bull flag breaks out, see you later. It's just going to be like that.
Hey, Frank.
Okay. Yeah, go ahead.
I bought a couple of calls for Novavax on Friday at 95 cents and then went up to $7, $8 yesterday and today.
There you go. Did you sell it?
Hell yeah. Hell yeah.
Right.
They were the $50
oh
calls
yeah,
that
totally
you mentioned it before. Yeah.
I did. Yeah.
Yes, you did.
So now you're hearing it from Aldi, and one of our newer, very smart members. And look at that. So you paid about $1, roughly $1, and they went up to $7 because that stock broke out on this candle this week. So this type of stuff, believe me, they don't care what's happening with the markets. They're just moving on they're dancing their own tune. So that's another one. The other one Regeneron. I keep on talking about this one. This is a granddaddy. I call it the Tesla of the biotech world. It's sick. Yeah, the stock will be down 10. It'll be up 20. But look at the chart. The chart is telling me straight out that this stock wants to go to $642, which is about $50 from here. which is $48 from here. And it's a beautiful bull flag. So yes, you get gyrations during the day, but as long as the long-term charts are projected out, you're fine, good to go. And remember, they could deliver the clinical results of their antibody coronavirus trials any day. Boom, within a second, it'll be up like 30 bucks. It's happened before. All right, mention a couple of other ones, 6 or 7. So I'm going to start wrap up. Oh, let me just show you one other chart. This is known as the SPX 533, Paul's favorite. And one of Paul's favorite. And let me just put some clothes on this baby, dress it up, Bollinger Bands. This is another great predictive chart, directional bias, simple English. Somebody asked me, what do you think the market's going? I said, let's look at this chart. I'll tell you what the market's going. Put some color on the painting, and we are good to go. This is solid. Okay, we have some resistance at 31.53, but as far as I can see, just first glance, it's the way I do it. This is what I would like it to do. I'd like this thing. Where is the pen? I need the MACDs. This is the daily. I need the MACD to go over 0. This is beautiful, the stochastic crossover. It is a continuation process. See that? Every single time when it does that. So this is a cup, this is a handle. We need this breakout towards 32.50. This is fantastic. It doesn't get, unless it hits 90, the RSI on the daily, 90, around 90 plus, it doesn't get overbought. So far, this is good. This needs improvement. Okay, this needs improvement, and this is good. Let's take the same chart and look at it on the weekly. Are you guys following me so far, especially the newer people?
Yep.
Okay. The weekly chart is, it has been now in the green on the MACD, 1, 2, 3, 4, 5. So it can still go on for another 2 weeks. I still think the markets don't, sometime by mid-July or so, we get a nice sharp pullback. This is good. And why am I looking at 2 months? I should be looking at 6 months. No wonder it looks squished in. No, let's look at 1 year, 0. See, that's a better picture. Okay, so this one is a little bit of a mixed picture. We did get overbought. It's kind of pulling back a little bit. But this is looking really good. Now here's the quickest way. You can just do a quick weekly count. So follow me on this, guys. How many weeks did it take for it to go green since the March crash? Let's take that as the first week, second week, so third week, fourth week, fifth week, sixth week, seventh. On the 8th week, always a number 8, the infinite loop, right? We went positive, and that's when the market was up here in the 2,900 range. So if we project, this was 8 weeks. If we do a exact time duration count, projection count, it should be 8 weeks that we go higher. So 1, 2, 3, 4, 5, 6, 7, 8. So we're in the 5th week now. Another 3 weeks brings us into what? Come on, guys, brings us into July 4th, right? Right? Guys, come on, I'm talking to you guys. Wake up,
Yes.
wake up, guys. Okay, exactly. So if we go, I'm telling you, this was 8 weeks. It takes 8 weeks, which brings us into July 4th. That's why I'm telling you, We're going to go up till about July 4th before we start to ease back again. Intraday volatility and everything included. So this is what I'm trying to impress upon you people, to look at the market in a completely mechanical, robotic way. Screw your what little voices in your head, screw what your buddy tells you, blah, blah, blah. I don't care. I'm showing you that even when you match these type of things, and I've been doing this for a while, I'm not saying that there's not no 100% guarantees in this business, but it's a high probability projections. What I'm trying to impress upon you, that the numbers match. 8 weeks it took for the MACD to go green. Another 8 weeks, it brings us into July 4th week. There you go. Matches. Is it going to be exactly like that? I don't know, but I think it will. Most of the times that I've done these type of projections going forward, I've been dead right. In between, we're going to have some real crappy days and stuff. All right. I'm going to take one more question because I got to go. Anyone?
Rieta.
Beast. One word. Like Cantor Fitzgerald, which is one of the top, they're like smart guys, smart cookies there. Or was it BTIG? Another smart cookies. There was $237 price target on this stock. I'm like, wow, yeah, baby, we've been buying that stock, you know. Riata Pharmaceuticals. Come on, what happened?
RETA.
I know. My keyboard was not letting me type that in. Yeah, thanks. Okay.
Okay.
There we go. All right, so this is your daily chart on Riata. This is a very different looking chart than everything else that we've seen. We're coming off the lower quartile, the lower bottom. We almost did a gap fill here at 104. Stock actually went to 115. And I like this a lot. You've got a downtrend lines. What we have to break out of in order for this stock to literally go straight to its $210 is break the range. The range, there's the first range is 123 to 177, 178. So 123 to 178 is what, 55 points, right? 55. Are you guys with me?
Yeah.
Yes. Okay.
Yes.
55. Oh, let me change the color. Why is it this? Okay. So depth of this is 55. If the stock breaks out over this, it's going to take it. It's going to literally jettison the stock from 178. What's 178 plus 55? 178 plus 55 is 233. Right here somewhere. Whichever the case, this is the way I'm looking at it. I don't want to make this super complicated. This is a biotech stock. It could be down 20 bucks for no reason because, you know, maybe some trial didn't work. Okay, high risk, solid chart, solid technical play. In my opinion, I sit on it. I buy the Julys, and as I'm getting closer to mid-July, I'll move it to August. Whichever the case, this is your range. And it is simply doing, you know, you can clearly see it. You guys can see this. It's pretty easy. All it's doing is trading within that range. This range is 50, what did we say? 55 points, like 120 to 180. Let's call it 60 points. This range is 60 points. So if it goes from 160, the next level is 180. It hit 180 just the other day. So 20 points from here, you make a lot of money. And at this point, there should be some big sell programs. It's happened every single time. However, if it absorbs that and breaks out, then you're going to go to $200 to $210. My opinion, somebody's looking at the stock to buy it. I mean, buy the company out. And if they buy this company out, they're going to pay you $220. Easy. That's the story.
Thank you.
Yep, absolutely. And these are totally different plays than trading Apple, Netflix, Tesla, all that stuff. I wish I had more time. It's been a pleasure. for all the new members, welcome. Thanks for your support. I know you all have been referred, and bring in
Thank
more
you.
referrals. Bring in more referrals. One thing we will promise you, we can't promise you billions of dollars. Okay, what we will promise you is you will look at the markets and you'll trade the markets in such a mechanical way that will be a great asset to yourself, and you will be yourself be the one who's going to put a lot of money in your pocket. And that's what we do. In the meantime, we're always here to help. We have the advanced coaching sessions that all of you can sign up. First, listen to those intro videos on YouTube, and get used to the style. And any quick questions, just DM us, direct message us on Twitter feed, or leave a question on the website. And God bless you all. Have a great evening, guys.
Thank you, Frank.
Thanks, Frank.
Thanks,
Thanks,
Frank.
Frank. You too.
Thank you.